let's face it, if like 2-3 years back, why are we in crypto? We're trying to make it and get the fuck out.
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even leverage.
What's up? What's up? How's it going, man?
Going great. Can't complain.
How are you? Do you go by
Good.
Kev or SushiKev
Markets,
nowadays?
Either works. Kevin, Kev, whatever. Sushi. People call me Sushi all the time. I don't know why.
Alright, bro. Like, good to have you here. Do you want to do a quick intro about yourself first? And then we'll learn more about options.
Oh, nice. Hey everyone, I'm Kevin, founder for Enhance. We're an options-based structured products platform. So very excited to be chatting more. I think not just options, but in terms of what we're doing as well in the broader market and how we think it fits in. So looking forward to chat more.
Cool. Before we go deep, well, we can go deeper a bit later, yeah? But like, if you were to explain what is enhanced DeFi, is it enhanced FI or enhanced DeFi? Enhanced FI, in let's say 3 to 4 sentences, what is it?
So it's Enhance. I think we Enhance finance is like way too long, but let's just call it Enhance. For Enhance, it's like an options-based structured products platform on chain that allows users to achieve certain outcomes very easily, right? If you look at it right now on the platform, it's basically just a vault format. People who want to achieve certain things, for example, in this case, for a first product, to generate income from a typically non-income generating asset like gold, what you need to do for users, you just go there, click deposit, and you kind of reap the benefits of the strategies behind. And the strategies are verifiable on chain, and that's really, really different from the, trust me, bro, kind of vaults out there. And that's what we're building. So that's what enhances in a nutshell.
Nice. Okay. So how many votes or strategies do you guys have right now? Live.
Right now, we just launched like 3 weeks plus ago. It's just one right now. I think it's more like one on ETH mainnet right now, which is the tokenized gold one. And right now starting with PAXG Gold. So this is like the second epoch that we're running. Mm-hmm.
Yeah, do you mind talking me through about how does it generate yield?
For this one? Yeah. So basically every strategy on Enhance is basically options based. And for this particular one, it's a rolling cover call strategy. I think people who are familiar with options may really not know what that is. For people who are not familiar, it's basically just selling call options on the underlying asset that you own and basically earning the premiums, the option premiums, as like yield or income in this case. And how it works is that, for example, right now, let's say gold is $4,700. You sell a covered call, meaning you sell an out of money covered call, meaning you have that gold, but you sell it at a price at, let's say, 5,000. So if it doesn't hit 5,000, during this period of time, you earn the premiums. Even if it does hit 5,000, you basically just have to convert parts of your gold to stables. But in this specific vault, it's kind of automated where the yield kind of auto rolls, where you can choose compounding mode, or you can kind of choose income mode where you can withdraw the premiums, withdraw the USDC basically. So it's basically selling volatility. And we realize this is one of the biggest areas where more and more people are doing on-chain right now, right? As part of the income generating strategy, because lending yield is super compressed, especially for these kinds of assets. So there's really no other place to find reliable, good source of income or source of yield. That's basically in a nutshell what it is.
Understood. All right. Take a step back. Imagine I'm a crypto bull only. I have no understanding of options. I have no understanding what is selling volatility. I just feel like I like gold. I want to hold some in case I lose everything on chain. how does the yield is generated. I noticed let's say last epoch I deposited some money in here. What does the spot settlement means? What is the strike? Can you talk me through the process? What are the key components when I'm looking at the UI as a brand new user?
Yeah. Okay. Sure. Let me just go through it. Okay, so basically, I think there's a bunch of different stuff here. The reason why we put this here is to basically allow full verifiability and transparency. So basically, for users, actually, I can walk through like user flow very quickly. It's as simple as just putting a number here, either PAXG or USDC. Then you just deposit. That's it. And then what happens underneath the hood is what's interesting. Where let's take epoch 1, for example, where it just expired 20. The way it works is that it processes by batches. The system batch it up, and every 2 weeks just roll these strategies. So let's say you deposit during before epoch 1 starts. You basically got into this. So what happened here is basically, I think back then gold was like 4,000-ish. It writes a strike, writes a cover call at this strike, which is 4478 price. That if it doesn't get there, it doesn't get in the money. Which means the option expire worthless for your counterparty, for market makers. But for you as a user, all you need to know is that you really ideally it doesn't hit this number, this price at the end of the epoch. So you keep all of your gold without having to sell it into stables. We'll get into what that means actually specifically in a moment. But basically, you look at this. This was the strike written for the call option, and what this spot at settlement is that at the end of the epoch, this is the price that gold price ended up at, like PAXG ended at, which is still below this price. So what does that mean? During this period, from the beginning till the end, you actually gain 100% of the upside of gold, right? While earning 9.3% APR annualized. So I've done a video on this around the APR and ROI, what this means on the website. But basically, this is the annualized rate of the premiums you earn. And this is pretty high, to be honest, APR. While this is the exact net gain. Let's say you put $100 in before the epoch, and at the end of the epoch, which is August 20, you actually have 105.23. So you make 5.23% net during this period. Of course, 4% plus is obviously the gold pump, the increase of gold, which you captured all of the upside during this epoch, while earning additional very juicy yields. We're talking about 9.3% APR here. And that's the total net gain for your dollar. $100, you earn $5.23 during these 2 weeks alone. That is pretty insane. Understood. That is pretty cool, to be honest. One thing that just want to chip in here is the transaction here. If you click into it, you can see the full strategy kind of written on Etherscan. So it's not like a Trust Me Bro kind of vault where the options are written here. Everything's pretty transparent in terms of what kind of options that are sold. Fully verifiable on chain.
Nice. Okay, let me summarize it because I feel like there's a lot of information for everyone. If you scroll back up, so correct me if I'm wrong, right? So if you scroll back up, so when users come to your protocol, the first thing they do is either they can use USDC to buy gold, which is PAXG, or if they already have PAXG, they can deposit directly into it. And then if you scroll down, basically, essentially you're doing something what is called cover call. In options, basically they're selling people the right to buy your gold at a certain price, which means if gold were to go above for the next epoch, which is the strike of $4,718. If it was to go above that, the counterparty is allowed to buy your gold at this price. Let's say if it's $4,800, you still have to sell it at 4,700. So
Yes.
and either way, by buying this contract from me as the users, there's something called a premium, which is essentially the APR. So they're giving me this 9.3%, 9.1% or 9.3% in order to earn this right to buy that above. So as a user, when I deposit, my view is basically, hey, first I'll earn this 9.1%, and also if I don't think gold will go above this price, or I'm happy to sell my gold above the strike price, this is the view that I would take. Is that correct?
Yes, and it's very easy to understand in a way that a strategy is very conservative. So you think about how far off the strike is. It's very less likely to get to that price. Even if it does, means that your overall dollar value is up quite a bit, as you
It's
can
almost like a
see
TP,
from the
right?
ROI. Correct,
it's
correct.
like
I
it's
think
like
one thing that
so it's like a earning yield plus TB kind of protocol. So
correct.
what happens if all right? So first off, a few question. The APR, I see 9.1% right now. Is that divided by 52 weeks? Is that divided per epoch? So how do I each epoch 1 week or 2 weeks, and then how much do I actually earn during the time?
Yeah. So when you get the premium, right, the right, like people pay the amount for the right to purchase the option. The option premiums, basically that's an amount already we already know, and that's paid upfront. So you use that amount divided by your capital, so you know you have a percentage. So for Epoch 2, for example, that percentage is 0.35%. So throughout these 2 weeks, you actually earn 0.35%. So this APR is a standard rate that we use across DeFi, where you analyze it, assuming that is for like the whole year. That is 9.1%, because in 2 weeks you already earn like 0.35%, and that's pretty decent, I think, in the grand scheme of
Yeah.
things.
It is definitely decent. All right, so what if we got a god tier green candle that it actually let's say I put $1,000 right now, and then the strike price tomorrow is actually $4,800. Do I actually lose money, or how does that work? Will you sell my PAXG and you'll buy less number of PAXG, but I earn more money in US dollar value because PAXG went up? Like, how does that work?
Correct. So that's the latter. I think you understand it correctly, which is the risk here is just slightly capped upside for this epoch. I'll get into the next epochs and why it's very interesting from our backtest. But the first thing you got to understand is that gold is like what, 4,600, 4,500 today, for example. You basically cap your upside. You have to sell at the 4,718, correct? Even if it went to 4,8 something. You will end up with the extra PAXG units will be sold off to the market maker, where you end up with less units at the end of the epoch, but you actually have a higher dollar value, and that dollar value is the 4,700.
Understood. So from a user point of view, as long as gold doesn't drop too much, my US dollar value will go up. So essentially, I'm compounding more. I'm by depositing, I'm basically hoping to compound more number of packs, as well as long as it doesn't grow too violently, I should be overall up basically. Okay, how
Yeah.
are these priced, by the way? Are you matching it like with market makers? Are you guys hedging it somewhere, or are you guys like how does the pricing and where does the yield come from essentially?
Yeah, basically institutional market makers who are your counterparties. They're essentially, they have this blind auction where they bid and they pay the premiums underneath the hood that gets funneled to the users.
Nice. Okay. I think I understand the product. if you guys have any more questions, feel free to DM me, ask below, and whatever. But let's talk about the general side of things for options. Like, this is not a new protocol, like, right? Like, this we have seen this in crypto in various forms before. Why are you building this again, and how is this different from previous, and why did previous one failed?
Yeah, I mean, there's a lot of stuff we learned from the 2021, 2022. There's like a bunch of option vaults back in the day. A lot of learnings there, I think primarily with the type of assets and the users are very different. You talk about market timing, it's very, very obvious now. Versus back in the day, it was mostly for crypto assets. Like, let's face it, if like 2-3 years back, why are we in crypto? We're trying to make it and get the fuck out. It's almost like that, right? It's like everyone's just, why would I keep my upside for this? But now it's very different, where the vibes is like, okay, we're fighting over, I'm earning 2% more on my stables off you. And the rise of vaults, wealth maximization, a thing. There are two things that are happening on chain right now. One is getting easier and easier to make money. It's a trade everything era, right? You trade everything, prediction markets, TCG, spot, perps, everything, right? RWAs, which means liquidity is going to grow, and it's getting easier and easier to spend money directly from on-chain. So the plasma ones, the ETH5 of the world, insanely good products. So you offer them less and less. What's going to happen? Liquidity on-chain will grow, right? And when it grows, you start to think about the barbell strategy, where certain things, it's not a trade. Like we can do trenching, we can trade meme coins here and there, we trade perps, make money here and there. But there are certain things that you don't want to think about it. It's like a DCA, or it's like a wealth maximization. It keeps growing. But there's not many options beyond just dollar, like yield on the dollar. Like, I'm not based in the US. If I have $100 in wealth, I wouldn't keep it 100% in dollar. It doesn't make sense. For me, that there has to be some kind of diversification that just grows on its own. And we're just thinking about that, the vibes now and the market timing now for more wealth maximizing products. And these kind of products are the best for that. It's proven in TradFi, right? JEPI with the JP Morgan Equity Premium Income Fund, $45 billion. The space of just covered calls itself, ETFs, is like almost a $200 billion space. And that's just covered calls. We have a lot more in the code, but that's just covered calls, and it's huge enough. But we don't have that enough structured products on chain right now, which is what we think is the largest white space in the next few weeks, months, and years. So basically, hopefully that answered your question.
I agree with you. So sounds like you're targeting the older trenchers that want stability on chain now.
Yeah, not just the older trenchers, man. Like, even I believe in the barbell strategy. Like, you either go freaking degen, you don't want to be in between, like no man's land. You either want to go like degen, try to like take risks here and there with a certain percentage. Then there are certain things that you just want to, see it grow on its own, ideally, or like have more stability, have less volatility.
I agree, right? Like, I think back then option votes had I think option votes had the problem back then, is that there is not enough good assets for options.
Correct.
Because even with ETH and BTC, the volatility is too high. You like last week, right? If you were to put like BTC and ETH in like a cover call strategy, you would actually sell your options at probably like 75K or 73K last week, and then you will lose all these gains. So I think that definitely is
100%.
It's not going to work for now, at least. But like, the reason why I brought you on and want to share this today is I think it's about time that we drop this biases that like crypto option doesn't work because of liquidity, because of this and that. No. It is because I think, in my view, right, first there's more and more on-chain RWA, for example, all those on-chain stocks, etc., on-chain gold, etc., that the profile is actually option fitting. So that's why like doing these early positioning in options makes sense again. Secondly, I don't know, have you guys done it before, but like setting up cover calls, doing all that shit yourself on a broker on your traditional asset is actually very fucking annoying. So I would
Painful.
imagine doing on chain, let's say with a well, I've only deposited for one epoch, so I can't tell properly. But like, I would say the pricing is fairly good. Yield is probably good. Hopefully for some airdrop. That's why I think it's plus EV, and I also think this is a growing trend. Like if you think about it, right, like as a user point of view, depending on the chain and the asset, they likely might get some incentives as well. So like, might as well do some here. So that's just my view. The only part is I think the on-chain RWAs and on-chain golds are not significant on chain right now because people are buying this as hedge or DeFi strategy, but it's not like I'm going to sell my physical gold and buy gold on chain right now, right? It's more like, oh, as I accumulate some, I might as well put them to work kind of thing. But yeah, so that's why I brought Kev to come on to share about this protocol, its underlying, and I think option protocol might come back. It's because of the quality of the asset that is coming on crypto.
Yeah, 100%.
Sorry,
I think
I ramp a little bit. All right, let's.
No, I love that. Love that.
But yeah, so like I noticed you have a few more strategies coming on soon. Like, are you just going to cover focus on cover call on various asset, or is that more things you guys going to bring on?
Oh, a lot more. Actually, we have a lot in the works. We started with ideas that are requested that make sense. I think it needs to be demand driven. So the most important thing is that covered call is a very basic strategy to kind of generate income. One cool thing that I forgot to mention with the product is that aside from the usual compounding way of like yield, you can also choose like income mode in our vaults, where you literally can get USDC stable coins every 2 weeks from your portfolio without actively selling. And that's useful for a lot of like non-income generating assets. And that's insanely cool. I believe there's no other vaults out there that really does this. Because if you think about these things, sometimes you're just not going to actively click the sell button. I suck at clicking sell buttons. I backpost shit all the time. I wish someone would help me like at least make it productive, and I can take some money out to pay for lunch. If not, I don't have money for lunch. And that's how we can envision this to be a very important piece moving forward. And that's how we're really innovating on the vault standard. It's not as just a typical like 7540 or 4626 vault standard. You just slap it on and use it, which is why we really go deep and try to reinvent a lot of the primitives, because we think that we're now at that stage where this could become so much bigger, especially for larger institutions that actively have a mandate to create income, for example, like invest in things that have income. And if it doesn't, then it's a bit hard to do that. So yeah, I think a lot more in the works and strategies as well, because what we really are, we're not just an options vault. If you realize I say we're an options-based vault, structured products platform. We think that more and more assets coming on chain, the future will be quite amazing, where you can mix and match. A lot of these assets on chain, meaning that imagine you can have vaults that have multi-asset. Like I believe in, the debasement of the dollar, whatever. I have BTC plus gold plus maybe silver. I don't know, like a bunch of different things, and combine in a vault and then have an options overlay on top that creates income. I can hold this thing forever, man. I believe that we're going to print more money in the whole world. I can hold this thing forever. And so that is something that TradFi cannot do, or even like take it a step further. In the next coming months, we do see even prediction market positions could be very interesting components of this whole thing. That's why you see we call our vaults as thesis vaults, because it's not just an options vault. It could encompass a thesis where, okay, I believe in Elon, for example. You buy a basket of Elon assets plus running income strategies on top or hedging strategies on top. So a lot of these in the works, especially with tokenized stocks in the picture. And these are the things that all this multi-asset, multi-strategy, multi-instruments is not possible in TradFi. They cannot underwrite like a prediction market position in a broader basket of assets. they cannot like combine crypto and non-crypto. I don't know, it gets hard, right? And these are the future we're building towards, where structured products can have such an important part of the whole financial future moving forward. So yeah, more in the works.
Nice. All right. So, what are some key dates and next product that you targeted to?
We're targeting, actually, if all goes well, in a month or so. We really do want to launch on with more tokenized stocks, equities product, starting with income generation, but also very interesting stuff. So stay tuned.
Nice. All right. Do you have any questions for me?
Yeah, I want to know, um, what's your experience been? Like, I know you've been user, you've been one of the early
My
ones that we
experience
talked to. Oh,
So I think I can imagine. So for me, there's a few good things, right? First is, personally, I never try to earn yield on gold, just because, like, if I were to do it with my banks, the size would have to be quite big. So I quite enjoy. I could just put a few K in to start sitting out. Uh, there's a part I don't like where, like, I have the special, like, so I'm a normal person that I don't have to stack gold on chain. Like, I buy gold in various forms, but not crypto version. So like I don't mind doing it. So that was a bit of a hurdle for me, but it was interesting to earn yield off the gold on chain basically, and my experience been good. The smoothness in buying with with like USDC into PAXG, seeing my yield compounds. Yeah, pretty good to be honest. But it'll be good if you have buy the dip, cash secure puts on certain asset. That's something that I personally like all the time actually. Like especially for gold, because like buying the dip is as important as yield generating on asset that we have.
yeah, I think that is in the works. That's coming soon. So,
Okay, I always ask every guest. I ask every guest this question coming on. What do you think it's needed to make it in crypto?
barbell strategy all the way, man. Either go full degen and do what you have an edge in, and the other part of it is just focus on something that just grows on its own, denominate in that. Maybe a few things that you denominate, but like, you know, I think just trying to do too much doesn't make sense. Find your edge. I think that's what we're trying to do as well, to build that safe place for people to be able to park some funds in and see it grow.
Nice. All right, man. Uh, any message to the to all the viewers before we jump off?
Yeah, give Enhance a try. We're open to all kinds of feedback. We are early, but I think very interesting to see how people interact with it. Any requests for products, like you mentioned, the cash secure push rolling strategy could be interesting. It's in the works. And yeah, any requests at all, any feedback at all, please let us know.
All right, man. Thank you for your time today, guys.
Cheers. Thank you.